Welcome to Crypto Night. My name is Ife, and in this video I am going to show you an easy strategy to use when futures trading. Currently I'm on the Binance Futures platform. This is what I am going to be using in this video. Before I start, as always, this is not financial advice. Always do your own research. The first thing we are going to do right now in order to use this strategy is to go over to the trading view section right here. You click on this. Now this is the chart we are going to use. We are going to use the price chart directly from TradingView. Now let's expand this. With my strategies, I always use minimum of 2 indicators. And in this video, I am going to walk you through how to configure these indicators and how to use them perfectly when trading. Currently, as you can see, I am on the 15-minute time frame. The first thing we would have to do right now is to go over to this section right here, change this chart from candles to line. Now this is what we are going to select right here. The line chart is a clear representation of the asset you are looking at. This filters out the noise. So all those candle wicks in a price chart would be eliminated. That's why I'm going to be using the line chart in this video. The first indicator we would have to use with this strategy is your basic exponential moving average. And to access this indicator, we would have to go to the indicators section and search for EMA. First result is what we are going to click. This blue line is the exponential moving average. Now we would have to configure this moving average to fit perfectly to this strategy. Right here, you click on this. Let's change the style. Let's make this color purple. The next step is to go over to the input section and we are going to change the length from 9 to 200. Right now, we are going to use the 200 exponential moving average. Okay. As you can see, this is the 200 exponential moving average. This purple line and the blue line represents the price of the asset you're looking at. In this case, we are looking at the Bitcoin USDT price chart. The way we are going to use this exponential moving average in this strategy is that when it comes to trading, you have to identify the trend you are in. Either it is an uptrend or a downtrend. So when I'm using this 200 length exponential moving average, it shows me whether I am in an uptrend or a downtrend on the 15-minute time frame. So this is very helpful when trading. I'm going to show you an example right now of what I'm talking about. You can see clearly here that the price went from below the exponential moving average and closed above. When this happened, you can see that the price went from a downtrend right here to an uptrend. So as you can see from this level, the price continued in an upward direction. If we scroll forward, you would see that we continued in an uptrend because the price was above the 200 exponential moving average. Another thing you need to know is in an uptrend, when price comes down and touches the 200 exponential moving average, the EMA would tend to act as support. So this supports the price in an uptrend. Now let's go over another example. You can see clearly here that the price went from a downtrend to an uptrend. Price tends to go higher in the nearest future, as you can see, and when the price comes down and touches the 200 exponential moving average, it tends to act as support. As you can see, support in the price. Understand? Let's go forward. So this is it, support. As you can see right here, this is another support in the price until the EMA gets broken to the downside. So once the EMA gets broken to the downside, then the downtrend is confirmed and you would have to be looking for shorts instead of longs. Basically, in an uptrend, you look for longs, but in a downtrend, you look for shorts. So this is the first part of this strategy, identifying an uptrend and a downtrend. Also, I need to show you an example in a downtrend. Now let's go back in price. Now this is an example of a downtrend using this strategy. Right here, this was where the price broke this 200 exponential moving average and the downtrend was confirmed. Every time the price goes back to touch this 200 exponential moving average, the purple line right here acts as resistance. Understand? So as you can see, resistance right here, second resistance right here, and the third touch right here is another resistance. So in a downtrend, this 200 exponential moving average acts as resistance. The second thing we are going to do right now is to bring out another indicator. This indicator we are going to use is the super trend indicator. To access this indicator, the super trend indicator, this is the indicator we are going to use in this video. Before we continue with this strategy, let's make a few changes. Go over to the settings right here. and I would edit the style of the super trend indicator. This red and green line, as you can see in the price chart, represents the super trend indicator. Basically, how I use this indicator is that it is going to guide me to my entry and my exit. That means when I want to enter a position, I am going to enter it based on the signal of this super trend indicator. So if it flashes a red signal in a downtrend, that means I am looking for shorts. But if it flashes a green signal in an uptrend, that means I am looking for longs. Understand? Right here, you can see that it flashed a red signal in a downtrend. So if I had taken my short, I would have gotten a chance to take profit at a lower level. You can also see next to it is a green signal. You would have to neglect this green signal because it is flashing you this signal in a downtrend, and you know that in a downtrend you are looking for shorts, not longs. You have to use this strategy based on this set of rules. Understand? Let me show you another example using this strategy. Right here, you would see that the super trend indicator is flashing a green signal. It is flashing this green signal in an uptrend, and you know that an uptrend is when the price is above the purple 200 exponential moving average. These two confirmations shows an uptrend. So what I will basically do is to enter a position right here. Let's highlight our risk to reward ratio. To do this, we would have to go over to this section right here, click on this, and select long position. As you can see, if I had entered this trade right here and taken my profit at this level, this is a very good risk to reward ratio. As you can see, this is a 2-to-1 risk reward ratio. This means that I would be losing less and gaining more. So that's basically how you use this tool, and we can go over to another example. This is a downtrend using this strategy. As you can see, the super trend went from a green to a red at this particular point right here, and the price was trading below the purple 200 exponential moving average. Now these are two confirmations. If I was to enter this, I would have entered my position at this level with a 2-to-1 risk to reward ratio. Now let's bring out our tool. So I would have entered my position at around this level, my stop loss at the highest point right here, and I'm going with a 2-to-1 risk to reward ratio. Now let's go forward in price to see if this trade would have played out. As you can see, if I had used this strategy, I would have entered at around this point with a 2-to-1 risk to reward ratio, and I would have gotten a chance to take my profit at a lower level. The price went exactly to my target, and I would have taken my profit at around this level. So this is basically how you use this strategy. It is a simple strategy that anyone can use. You just need to follow basic trading rules, and this strategy can turn out to be very profitable. I truly hope you enjoyed this content, and if you did, you can give this video a thumbs up. It really means a lot, and I would really appreciate it if you do. And also consider subscribing to the channel, as I post content like this to help you on your trading journey. And I will see you in the next video. Goodbye.